Hey guys, it's me, Desi Arnaz, professional investor, and I want to welcome you guys to my show today. This is our show. It's called Note Investing for Newbies. Those of you that are new here, this is a show where we teach people how to invest in mortgages as private note investors to grow their own portfolios and create financial freedom in their own lives through cash flow from mortgage notes. So welcome you guys. We are live on Facebook today, Monday, and I do this every Monday at 4 o'clock Pacific. So I want to invite you guys to share this today, if you don't mind, sharing it with your friends, your relatives, like it, share it. So today, in our show today, we're going to actually be talking about exit strategies that you can use as a note investor to make a profit on the notes that you do invest in, because people are always asking me about exit strategies, and I know that it's an important thing. As a matter of fact, I like to say you need to know before you buy the note how you're going to exit and what that exit strategy will actually look like. My show today is brought to you by investbrilliantly.com, and you can go over to the website investbrilliantly.com, and at investbrilliantly.com you can learn more about note investing. You can also take a look at our coaching program that I provide for people who want to have their hand held while they're out there investing in notes. So anyway, you can just go to investbrilliantly.com for that if you'd like to learn how to do that. So so let me just, without any other delays, let me just go ahead and get started and share with you guys my presentation for today. Brilliant exit strategies for note investors. Okay. And I like the word brilliant. That's why it's a part of my branding. Invest brilliantly. Here's some brilliant exit strategies. And you're going to know why in a minute I say that they are brilliant exit strategies. Okay. There are a lot of different exit strategies that you can have when you are investing in notes. And here, for example, are 12 of them, just to name a few. You can hold that note for the term of the note. You can hold it temporarily for cash flow and then sell it. You can approve a short refinance. You can modify the loan and sell the note. You can repossess and sell the property traditionally. You can repossess and sell the property with owner financing. You can repossess and lease it out, repossess and rent to own, repossess and upgrade and flip it. You can sell it at auction. You can approve a short sale. You can hold it as a second home. You can hold it as an Airbnb. You can move into it. I mean, the list goes on and on and on. And that's one of the reasons why I really like investing in notes, because I have a lot of options available to me as the bank. And for those of you that are not sure what a note is, basically a note, the types of notes that we buy are promissory notes, are IOUs. And so we buy mortgage notes that are owned by banks, where people owe the banks money, right? So people go to a bank to borrow money to buy a house, and they start making payments to the bank every month. And then what we do is we come in and we buy the mortgage from the bank, and instead of making payments to the bank every month, they make their payments to us. And so we collect those payments for 20, 30 years, you know? And so that's what we do. We buy mortgage notes because they give great cash flow. We have the real estate itself as collateral. So if the people don't pay, we get the real estate. So we're going to look at some of the exit strategies today. And I'm going to see if I can really kind of get you guys excited about note investing, just like I'm excited about note investing. So one thing that I do want you to do, again, as I said, is go over to investbrilliantly.com. You can also like and share this on Facebook with your friends, and see if we can get some more people over here to take a look at this valuable and exciting information. Okay, so let's see. Let's do a scenario today. I like to do case studies and scenarios. So in this scenario today, what we're going to do is we're going to, let's just say we're going to kind of assume that we are buying a mortgage note, and Barry, the homeowner, is he's looking pretty suave there with his sweater on his back, right? Tied around his neck. He's really cool. Anyway, Barry, the homeowner, has a property that he lives in. It's his house. It's worth $100,000. He owes $74,000. UPB stands for unpaid principal balance. He owes $74,000. His interest rate is 8%. He's got 23 years left to pay. His payments are $587 a month. He pays as a C grade, meaning that every now and then he's a little bit late, but he always pays. Okay. And we were able to buy this note from the bank for $55,000. Now, think about that for a minute before I go on with the exit strategies. Here's what we're looking at. He owes $74,000. We're able to buy it for $55,000 because it's a C grade note. Okay. But yet he still owes us $74,000. So we have instant equity, in this case, about $19,000 in instant equity, don't we? If he sells that house the very next day, he has to pay us $74,000. Now we're earning 8% interest on $74,000, but we've only got $55,000 invested. That means we're actually earning 12% on our $55,000 investment. You have to use a financial calculator to do that math, but that's what it works out to be. So here we are. We're buying this note in this scenario. We're going to earn 12% yield, and we want to see what some of our exit strategies are. Well, the first exit strategy that I'm going to talk to you guys about is hold for cash flow. Okay, and what is that? Holding for cash flow simply means that you're going to just hold this asset and not worry about doing anything else. Just going to collect monthly payments and put them in the bank. You know, nothing wrong with that, right? Nothing at all. So if you hold it for cash flow, that means that for 23 years, you're going to collect $587. There's 276 months in 23 years. So just do the simple math. $587 times 276 months is $162,000. Now think about that for a minute. Let's say you're 45 years old. You're going to be retiring soon, right? You can take $55,000 in your retirement account, and you know you're going to have $162,000 when you hit retirement age. I mean, that's not a bad thing. So that's one of the things. Taking that $55,000 and using it this way, you will grow that to $162,000. That is at a 12% annual growth rate using the financial calculator. You'll see that. And so, you know, if you go to the Social Security website, you'll see that most people in America, like 55% of them, retire with less than $50,000 in cash available to them. And here is an opportunity that a person can retire with $162,000 at 55, right? So people don't know about this, and I find it, I've made it kind of like my mission to show people how they can do this. And you don't have to start with 55,000. You can start with less. But if you have more, it's even better. So that's one way that you could exit this particular transaction. Here's another option. We could hold this for cash temporarily and then sell the note. So let me show you how that would look. Suppose we just collect payments on this note for 5 years, and then we sell it, okay? Over the 5-year period, let's say we collect 60 payments, right? 12 payments a year for 5 years. That means we will have collected $35,200 in payments. Simple math, right? But after 5 years, these people still owe us $67,000. Now remember, they started off owing $74,000. Now they still owe $67,000. Why is that? Because most of the mortgage payment that people make each month is not principal reducing the balance. Most of it is what? Interest, of course, right? It's interest. And what is interest? It's profit for the lender. That's what interest is. So we will have collected $35,200. And at that point, we're owed $67,000 still. There's still 216 payments remaining at that point. Well, if you put that into your financial calculator and you find a person out there who says, hey, I'd like to buy something or invest my money at 12%. Then they could buy this mortgage note from you for $52,000. Now remember, you paid $55,000, so you're selling for $3,000 less than you paid for it. However, you did collect $35,200 in the meantime, correct? So if you sold it to someone who wants to earn 12% on $52,000, then this is what you would have. You will have collected $35,200 plus you're going to collect another $52,000. So all total, you will have $87,200, right? What kind of a return is that for you? That is an annual return of 19.7%. I mean, look at that. That's phenomenal, isn't it? Where are you going to get 19.7% return with safety and good collateral and cash flow? This is why I'm so enamored with note investing, because the returns are wonderful. The safety is so comforting, and there's not that much work involved. You know, you can make good returns in other ways, of course, other types of investments, but oftentimes to get returns like this, you have to go into high risk environments. Here's an opportunity to earn these kinds of returns without going into high risk environments. Okay, let's take another look. Let's take a look at another option. Another option is we could approve something called a short refinance. Now, what is that? A short refinance is where we agree to take less than what we are owed. We take a short on the payoff to us. And let me give you an example of that. Okay, suppose we buy this note, and then we reach out to Harry, the homeowner, or Barry, the homeowner, and we say, hey, Barry, we notice that you're paying 8% and that you owe us $74,000. Tell you what, if you'll go to Bank of America, Wells Fargo, wherever, and get a mortgage from those guys, pay us off, we'll accept $65,000. Now, why would we do that? Because what it does is it gives us a chance to boost our yield. I'll show you that in just a minute. But think about this. We only paid $55,000, right? And if Barry, let's say it takes 6 months to negotiate that and for him to get the refinance done. If Barry pays us 6 payments over the next 6 months, then we're going to collect $3,522 in payments. Plus, he's going to give us $65,000 when he pays us off. So all total, we will be paid back $68,522, right? In 6 months on a $55,000 investment. That's a $13,522 profit, isn't it? $13,522 in profit in 6 months. Stick that into your financial calculator and see what you come up with. 56%, guys. That's a huge annual return. Huge. And you did that by working the note. Now, did you have to take 65? No, you probably could have taken 67, 68, maybe even 70, and it would have still been enough incentive for him to do it. Sometimes people will do it just from you suggesting it. You don't always have to take a short payoff, but I think it just sweetens the pot a little bit. And in Barry's case right now, interest rates are pretty low. He's paying 8% to us. He could refinance now and get a 3%. So if Bank of America gives him 3% on the refinance and we offer him $65,000 payoff instead of $74,000 payoff, he's going to try to figure out some way to make that happen. And when he does, look what happens to our return. Our return is phenomenal. Phenomenal. If I told you guys some of the returns that I've earned, you wouldn't even believe it. But you can see here, this is a great return, and you see how it is. It's not pie in the sky. It's a win for Barry. It's a win for us. It's just business, right? You see, guys, we're in the money business when you're in the note business. When you're in the money business, you can make things happen. That's the business that we're in. Let's look at another exit strategy. Same scenario, but this time we're going to modify the note and then sell it. Okay? So here's how that would look. What does it mean to modify the note? It means to change the terms of the note. Okay? When you buy a mortgage, in general, you always buy the mortgage under the terms that the bank had originated with those people. However, you can modify those terms if the borrower is in agreement. So let's just say in this example, we talk to Barry and we say, Barry, we'd like to show you a way that you can save quite a bit of money and we'll lower your interest rate for you in the process. Would you be interested? And he goes, well, yeah, sure, I'd be interested in that. And so we explained to him that what we can do is we can modify the mortgage for him. And let's just say the whole process takes 4 months. Okay, so 4 months in, Barry will have paid us $2,348 in payments, and we modify the mortgage to a 15-year term. We lower his interest rate from 8% to 6%. Now that bumps his payments to $624. Remember, he's only paying $587. So that bumps his payments to $624. That's $37 a month more, but it's a lower interest rate and a shorter term. So you may say, why would Barry want to pay a higher payment? Well, because he's going to save 8 years of mortgage payments. Really? Right? He's going to save 8 years of $587 payments. If you do the math on his savings, he's going to save $56,000 in payments by doing this. That's 8 years of payments for $37 a month. Okay? So it's worth it to him, but what does it do for us? Well, let's take a look at it. What I would suggest is we would hold on to that mortgage once we've raised his payments. We would hold on to it for about a year in order to season it. And the reason that we want to do that is because then when we sell that note, we can sell that note as a seasoned note with 16 payments, 4 that we collected at the old interest rate and 12 that we collected at the new interest rate. Okay, so all total, we will have collected $2,348 in payments initially, and another $7,488 along the way. Now, if we sell that note, now that we've got this great pay history, we can sell that note as a B grade note. B grade notes sell for a higher price. You see, a C grade note gets 12% because remember, Barry was a little bit slow pay every now and then, but we've been working with him and he's been paying on time. Now he's great and he's on track, and we can sell this note as a B grade note at 10%. So we can sell the note for $56,300. So our total payback will be the $2,348 that we collected for the first 4 months, then the $7,488 that we collected for the seasoning period, right? Plus the $56,300 that we get when we sell the note. So our total payback is $66,000, right? $66,000. And our annual return in that scenario is 26.1%. Yeah, you know what? Patrick says, amazing stuff. And you're totally right, dude. This is amazing stuff. That's why I said to you guys, I want you guys to do me a favor. Share this right now. Share this out on Facebook. You're on Facebook, so just click the button, click the link, like it, and share it, please. It will be very, very helpful for me. Now, if you guys want to learn how to do this kind of thing, I'm going to just take a quick commercial break and give myself a shameless plug. Go to my website, go to investbrilliantly.com, and at investbrilliantly.com, you can click on, well, first of all, I have a lot of information there. You can learn a lot without any coaching. I have free material there, videos there that you can watch, written materials that you can read. But if you want to know more, you can also just click on this little button right here. Tell me about your coaching program, right? And then you can learn more about our coaching program. My coaching program is $97 a month. Just go to Invest Brilliantly. You pay $97 a month. It's month to month. There is no contract. And you have access to my full training program, which is about 50 videos. I think it's 50 or 51 videos on different topics relating to mortgage note investing. And you'll have access to that on day one. And in addition to that, you'll also have access to me as your coach and mentor. And you'll have access to our Saturday mastermind calls, in which I hold calls every Saturday, except this coming Saturday, which is the 4th of July. But other than that, I hold calls every Saturday morning from 8:30 Pacific till about 10 o'clock, 9:30 to 10 o'clock. And we talk about all things notes and investing. And these are real deal investors. These are not wannabes. So, I want to encourage you guys to, take a look at that. Go to investbrilliantly.com, get yourself signed up there, and let me start helping you guys to learn this valuable investment strategy. Okay, let's get back to Barry, the homeowner. Barry, the homeowner. So this was a great one, right? Modify the note and sell it. That works out really well. How about this one? We can foreclose and sell for cash. Now, before I go on, I just want to say this. We don't always have to foreclose. Sometimes people just give us the properties back. I've got some people moving out in 2 weeks. They're just giving the property back. They can't afford it. They want to move on. So when I say foreclose, I mean we simply take possession of the real estate. That's what I'm talking about. If they don't give the property back and they're not making their payments, I have an option to use the legal system to take their property away from them. That process is called foreclosure. Okay, so I have that as an option. But let's just say now we now own the real estate because either they gave it back or we took it back, but now we own the real estate. I can sell that real estate traditionally. Let's just say that after making 4 years of payments, these people stop making payments. Now, does that ever happen? Sure, it does. People lose their jobs, they get divorces, just things happen and people stop making their payments. So if they've paid on time for 4 years and now they stop making payments, during the 4 years, I would have collected $28,200 in payments. But now they're not paying anymore. And so I need to foreclose. How do I do it? I reach out to my foreclosure attorney in the state where the property is located. I have a foreclosure attorney in every state. So I reach out to the foreclosure attorney and I simply say, go take the house. I write him a check or her a check and they go get the house. In some states, it takes as little as 2 months. In some states, it takes as long as 2 years. However, most states can be done in 10 to 12 months. The overwhelming majority of them can be done in 10 to 12 months. So in my example, I'm going to say it's going to take us 12 months. Okay? Now, here's what we do. We get the property back and then we sell it. Now, remember, it's worth $100,000, but if we want to just sell it quickly, we can sell it for $90,000, right? It should sell a lot faster because we're giving a big discount. After paying the attorney, after paying our realtor, maybe we get 80 grand out of the deal, right? So let's just do this. Let's say we got the $80,000. We also got 4 years of payments, which was $28,200. So all total, we get $108,200 in this scenario. You see that? It's not trickery or magic. This is just simple common sense stuff, right? We own the house, we sell it for 90. Boom, we make $80,000 and so forth. So $108,000. So what kind of a return is that for us? Remember, it took us a year to foreclose. So I'm going to say over a 5-year period, your return is 21.2%. 21.2%. Well, here's what I can tell you guys. We make great returns, as you can see. Patrick says here, he says, let's see, helping people stay in the house is not only satisfying and kind-hearted, but it can be extremely profitable over time. That's true. We don't have to foreclose. We can modify and let these people stay. But worst case scenario is they don't pay and they can't afford to stay. And so you can wind up with the property. When that happens, it's very profitable. Okay. My $55,000 would have grown to $108,000 in 5 years. That's 21.2%. Okay. So those are some really typical scenarios. Those are not extraordinary scenarios. As I said at the very beginning, I listed 12 possible scenarios. There are more, and they all look good. And here's the beautiful thing. Before you ever buy a note, before you ever actually pay for it, you work out the scenarios, the exit strategies in advance. And that's the kind of thing I teach you at the Note Investing University. So when you sign up for our course, you have access to our Note Investor University. All the classes are in there. Then you have access to me mentoring you one-on-one and in a group, and reviewing paperwork with you and explaining things to you and putting you in touch with our servicer and all of our contacts, our attorneys and our realtor base that we have, national database of realtors that we have around the country. I mean, you get all of that. And it's $97 a month. I mean, come on, really, seriously. It's a great value. And when you buy your first mortgage note through us, you no longer have to pay $97 a month, and you're still a part of the whole organization, the whole group. You're never kicked out unless you become an idiot. Then if you start acting stupid, we'll kick you out. But other than that, you'll remain in, right? So, guys, I'm telling you, this is fabulous. It's a great way to invest. Go to investbrilliantly.com and share this with your friends and family. You guys, I can guarantee you right now, you have people that you know personally that are not earning these kinds of yields and that worry about the stock market every day, that maybe the market's going to crash and their retirement's going to get wiped out, right? So you need to be sharing this with people. This is a Facebook Live. That means this video is going to be on Facebook. Just send it out to some people, share it with them and say, hey, you really need to see this. Send it to your accountant, send it to your lawyer, send it to your hairdresser, send it to your friends, send it to your kids' parents. People need to see this. They just don't know. They have their retirement account sitting in the stock market, crossing their fingers. They're happy today because it's up. They're sad tomorrow and scared because it's down. The problem is with the stock market is, first of all, they don't get these kinds of returns. And secondly, you don't know where the market's going to be when you retire. What if the market's down when it's time for you to retire? You take your retirement out and boom, it's half gone. I mean, that happens. You wouldn't be the first person that lost their retirement in the stock market. Okay? You guys know that what I'm telling you is absolutely true. You know it's true. So why aren't you sharing this? You need to share this. You owe it to people to share this with people. That's why I'm sharing it with you, so that you can share it with others. The other thing that I'm going to suggest to you too is that you teach, if you become a student of mine, you'll always hear me say this: teach the next generation. Because if you teach people how money works, they'll never have to be broke again. Just teach this to your kids and your nieces, your nephews, the next generation, so they don't have to be broke. Now, obviously, if they don't want to learn, there's nothing you can do about that. But I can guarantee you that in your family, there's someone that will pay attention if you shared this with them. I guarantee it. Okay? And so what you've got to do is just start sharing this and see who pays attention. And those that pay attention, share it with them. It's fabulous. That things that you can do for these to help people get their lives in order. You know, when we invest in mortgage notes, we become the bank. We literally step into the banker's shoes and we start collecting the payments. The whole system was designed by bankers to protect their interest and to make sure that their risk of losing money is minimal. Minimal risk. The day that you become the lender in this scenario like this, now you enjoy that fantastic benefit of minimal risk and high returns. It just makes sense. It's not get rich quick, it's just get rich, okay? In addition to that, I also have a training program for people that want to learn how to actually get into this business, not just to invest their own money as a private investor, but to invest other people's money as a professional investor. If you'd like to learn that, again, go to my homepage, my website, investbrilliantly.com, because you can sign up for my coaching there. We'll talk about it, and if it makes sense to you, then I can teach you how to do that as well. Okay. There you go, guys. That is our show for today. Share this thing. Yeah. Marisol says, yes, that's right. Be the bank, right? That's the goal. Be the bank. You can certainly do that. Thank you, Marisol. I'm so glad you shared that with us. That's great. Hey, you guys, if you guys have any questions or anything like that, you can always reach me by calling me directly. My phone number is right there on the screen, 951-551-0087. Also, on my website, investbrilliantly.com, you can book an appointment. My calendar link is right there. Just find a time that works for you, and if it's available on my calendar, it means it's available. I'll be happy to talk to you about this. I love talking about this, and I love changing people's lives. This is way bigger than just me or just you. This is far bigger than that, and I hope you see that. That's all I got, guys. I want you guys to enjoy yourselves. Again, this is the Note Investing for Newbies show every Monday at 4 o'clock. I'll see you guys next week. God bless you very, very richly, and keep pushing forward, guys. Bye-bye.